Harvest Fund Management in China is one of 10 new spot Bitcoin ETF applicants, and according to reports, these new ETFs could hit the market as soon as February 10th. My name is Wade Teamer. I want to thank you for watching DHN Crypto, where I do the research so you don't have to. But you should anyway. If you enjoy clear, consistent crypto content, I need you to hit that like and subscribe button for me. And we're going to jump right into this story because there are a number of factors at play that could have a dramatic impact on Bitcoin's price over the next few months. We got the halving coming up in just 74 days. And with that, with all of these institutional investment products giving new exposure to Bitcoin, giving institutional players, big money players, more ways to buy Bitcoin, we are definitely in a race to 1.4 million, guys. Well, let's take a look at this report here. It indicates that the Hong Kong regulatory body may approve multiple spot Bitcoin ETF applications, similar to the US SEC's approach. Although Harvest Fund applied first, other regional financial institutions have also shown interest, and there was a report from Bloomberg a couple months back. Venture Smart Financial Group is another major player out in Hong Kong. They want to release their spot ETF in Q1 of this year. So it could happen back to back, much like they're suggesting. Now, the move is coming after Livio Wing, COO of Hashkey, and forgive me if I said that incorrectly, but he disclosed that about 10 asset management firms have started developing spot crypto ETF applications for the Hong Kong Securities Regulatory Commission. So the environment is much like the environment was over here in the lead up to the approval of the ETFs and then ultimately them hitting the market within a few days or so. We got pretty decent price action leading up to and then the week of, but we did have a slight correction. And I think that mainly had to do with it not, I guess, people's expectations not being met. But from a technical level, I really think it had something to do with the redemption model, because over here in the United States, it was a cash only model. All of these fund managers are using cash only models, which means that you can get the ETF shares, but you can only use cash. And when you go to redeem them, you can only redeem it for cash. So that prevents the players, the customers with these ETF products from actually having to exchange Bitcoin. That would have put so much more pressure on Coinbase to have more and more Bitcoin on the books. However, Hong Kong's method is very interesting, guys. When we were covering the ETF news last month, I made it a point to let you guys know about the in-kind versus cash-only redemption models because these are very key. One of them implies the use of actual Bitcoin within the transaction, while the other is strictly cash, like we said. In Hong Kong, according to Susie Ward, the article she wrote in Forbes back in December, Hong Kong has decided to approve both ETF models, and the reason this is important is because it opens up investment avenues, likely drawing in more institutional and retail investors. This move is expected to enhance Bitcoin market liquidity and stability, reflecting a broader acceptance and regulation of cryptocurrencies globally. Something else that popped up to me, guys, really quick, is that we had a discussion on if other cryptos could be turned into ETFs, spot ETFs. We're a long ways away, but the current consensus is that it will only be Bitcoin or Ethereum. I picked that up as I reread that article. Just wanted to add that in there. But getting back to the redemption. The Hong Kong Securities and Futures Commission has green-lighted both in-kind and cash create models for Bitcoin exchange-traded funds. The decision marks a significant divergence from the U.S.'s cash-based approach and sets the stage for a potentially transformative era in Bitcoin investment. The in-kind ETF model typically allows investors to exchange their existing Bitcoin holdings for ETF shares. In this context, it means that investors can redeem their ETF shares for Bitcoin, making the process a two-way street, from Bitcoin to ETF shares and vice versa. Now, the impact that model is going to have is very crucial because they greenlighted both. So what's going to happen is the larger institutions, they'll probably elect to do the cash only model. So you'll have what's their dollar over there? The transactions will be denominated in their currency. But what's interesting about Hong Kong is that they are far more advanced when it comes to digital dollars and stable coins. As a matter of fact, along with this news, there are also a list of stablecoin companies, a new list of stablecoin companies forming that are falling under Hong Kong's stablecoin regulatory decisions that they've made recently. It's going to open the door for stablecoin issuers to be put in the same places where the Hong Kong dollar already exists. So that is really about to revolutionize the entire landscape over there. That's why this is very interesting. Bringing it back to the United States, though, with both redemption models being on the table, again, I want to stress this. If one of these ETF applicants, if it comes out, which we will know most likely by the end of the week, that they decided to go with the in-kind model, then we're going to have a lot of Bitcoin transactions on the network. And that's got to have an effect on price. Because if you take a look at why this really matters, guys, it's going to have a dramatic impact on the supply of Bitcoin that is available on exchanges. Because if they're doing the in-kind model and they want to get, a company wants to get a lot of shares, then they're going to need a lot of Bitcoin in exchange. When you look at the amount of Bitcoin that is on the table, we're at 19.6 million in circulation out of 21 million. That's only 1.5 million is on the table, ladies and gentlemen. What is that going to look like? All right. And then with the Bitcoin halving being in just 74 days, yeah, that's going to have an impact as well. Again, you would have to do the digging, looking to Bitcoin mining profitability right now, Bitcoin mining production. When I added Bitcoin to the Elite 8 for this year, a lot of the information that I sourced for that episode came from my study on Bitcoin mining production cost. It was supposed to get to 45K. That's honestly why I'm not shocked that Bitcoin's price is where it is right now and is staying where it is right now, so close to the halving. A lot of people in the committee have been saying, hey, I don't think we're going back to 20. I don't think we'll ever see a 20K Bitcoin ever again. I tend to agree because of the mining production cost. So with all of these factors coming to play, guys, you got to think about what brought us here, because we are in a different point in the market than we were several years ago. Man, it almost does seem like ages since the crash of 2020, right? But since then, we, of course, had the approval of the ETFs here in the United States. Clearer regulations have been put on the table as well. We've had major victories, of course, XRP versus the SEC, as well as Grayscale versus the SEC. And if Coinbase continues to do their job, then we're going to have Coinbase that beat the SEC. So compared to where we were years ago, like when I got into the space in 2019, all of these things were gas, smoke and fire, smoke and mirrors, right? That's all it was. It was just talk. But here we are now. And at the same time, Hong Kong themselves, they are in the advanced stages of regulation of crypto. Like we just mentioned, they got stable coins on lock. They got the metaverse on lock. They got gaming on lock, cross-border payments. It's pretty huge over there. Something else to think about, too, is I think we have the legs for an institutional bull run. I'm going to explain to you why. Again, back in 2019, things like crypto futures and spot ETF products and the tokenization of treasuries and all of that, smoke and mirrors, merely discussions. But we have it now. We have more institutional channels for crypto investment than we've ever had before, right around the time Bitcoin likes to do a jump. Definitely setting the stage up for an interesting bull run. With that, though, that's the news, guys. One thing I want you to do is self-custody your assets. Our channel partner, SafePal, has just launched a new model, the X1. I've been using my SafePal going on 3 years now, guys. Haven't had any issues. Definitely recommend checking out some of the episodes that I have in regards to setting it up. Because I'm telling you, self-custody is going to be the name of the game going forward. A lot of people got bit by FTX, Celsius, Terra Luna, and all these other places where your crypto was being held on an exchange. And yes, I'm going to plug the exchange that I use is Uphold, but I'm going to tell you this. I don't ever keep my assets on an exchange more than a day. All right? They're going straight into self-custody because the name of the game is to hold anyway. The best place to hold your assets is in a self-custody wallet. And then you got to find a good exchange to get them into the wallet. And that's why I suggest Uphold. But with that, guys, you know what I want you to do. Have a great day. Have a prosperous day. And also, don't forget to check out the membership button if you want to contribute to the growth of an aspiring crypto personality. For less than the price of a cup of coffee, you can make that happen. So, with that being said, I'm done talking now. Have a great day. Have a prosperous day. And always remember, if the money is digital, so is the hustle.